just to let everyone hear. Yeah. So first of all, hello, everyone. Welcome to the third training session. And before I start, as usual, I will tell you a couple of words about the rules. And my kind request is to make, as most of you already have done, to put the number of your team in front of your name, right? So my kind request is again to write your name fully and to put a number of your team, as you can see in the chat, in front of your name, in order for us to be easier to interact and also for our trainer. Second, we do respect everyone. We share love, we share all the positive energy in the world. And the questions and answers will be at the end of the session of the training. I'll present also shortly the agenda. Now, I can see that you're already doing that. So welcome to everyone, every team. And we are very happy to have you here. So now I'll share my screen. Okay. Okay, then. Here you are. So again, welcome. We are at the third session of this training of Queen training sessions. There is one thing that I was always talking to you when we had the previous meetings, mentioning several times, that we have a specific way of looking at the way we are paying for stuff and how we are buying stuff, and then how we plan our finances. And this actually goes not only about the businesses that we do, if we do them, but it's also valid for our own households. Usually this comes from the huge list of dependencies and understandings coming as principles from our families, from our parents, how we did that when we were young, when we were students, or what we were doing, how we were planning our finances. So if it's possible, it's a very long list of people that I know, they did not have any training in that field. That might result in a difficulty to plan your finances. So today's session is basically something that we will try to bring up to you, an expert, absolutely wonderful person that I'll tell a little bit more in a couple of minutes. She's also a colleague from Civita, Slovakia. And beside that, she's a really good expert, not only generally in international budgeting, but also in startup and so anything related to planning financial. But also she will be the one to explain that in a very simple and accessible way. So our plan is this way. Now I'm having this welcome and speaker introduction. Now our trainer, Eva, will provide a keynote and then practical work. And at the end of her session, by 4 o'clock, we'll have the question and answer session. Now, she has a lot of things that she has planned for you. And mostly, it's actually every one of you will be interacting and you will have to answer. And we are following that as well. You know that the presence is quite mandatory in this case. And for anyone else who will have the time and will have questions for the Civita team, from 4 to 4:30, we will provide answers to anything related to the project and your activity and your mentoring session and so on. So now let me present you the amazing trainer. Her name is Eva Simekova, and she's an associate partner at Civita, Slovakia. Now, 15 years of experience in the creation and oversight of budgets in a range of international projects is something to be impressed by. I am personally definitely impressed. Eva knows that. We managed to meet, and I did not mention that probably before. But again, she's really aware of a lot of EU specific related issues, and she supports this SMEs, so the small and medium enterprises, with direct access to funding for startups. Now, business startup consultancy, oversight of legal, financial, organizational structure, this is what she will be talking to you about. Now, let me give the floor to this amazing trainer that you actually have here. Eva, you have the floor.
Wow, Daniela, thank you so much for such an amazing introduction. Now I feel like a queen. So who can be more happy than me that I'm among all of the other queens that you definitely are. And yes, as Daniela mentioned, we did meet and I was impressed the first time I saw her green hair, which I just said that it's like, it makes me so calm and, you know, relaxing. So I really enjoyed being with her and working with her for some years, I would say. Thank you for having me here. I hope we will have a great session together. Maybe just to add that I have been a business angel in a couple of companies, those little logos you saw. And I was kind of, my role in the companies was to kind of establish them, set the rules in terms of legal, tax, and accounting principles in my country. And that was kind of my value that I was bringing to the startups, and I exited most of them. So now my kind of experience and what I've learned, I'm either using that for startups that we accelerate. We run a couple of acceleration programs in Slovakia. One of the latest is Challenger, which now is Civita-wide program. We have Challenger Green and Digital. We have Challenger AI in Ukraine. We have Challenger Diversity in Estonia, and we have Challenger Urban Creative in Košice, which is the second largest city in Slovakia. So let's hope that maybe one of you or even all of you will take part in one of our acceleration programs where your growth will be accelerated in a short time. So some ground rules. I would very much appreciate if you could switch on your cameras, if that's possible. If that's not possible for some reason, it's fine. I will respect that, but I would love to see your faces and your feedback. I see if you're smiling, I'm doing a good job. If you're like bored, then I know that I have to change the topic or accelerate or make some, fun jokes so that you won't fall asleep during my presentation, which I would not be happy about. And then Daniela would be like, Eva, what did you do with my queens, So if that's even a little bit possible, I would really appreciate that. Second thing, I would love interaction. So I will try to call out or interact with each and every one of you. You have a great thing to have numbers. That's going to help me. I also have a paper with numbers, as you see. So I will be marking down every team that I call out so that I make sure each one of you gets to talk to me or talk to others or interact. Okay, so we can start. I will share my screen and bear with me because this is not my strongest feature, I would say, in sharing. Okay, can everyone see the screen? Can you show me a hands up or heads up? Yeah, okay, I want to see all of you. So I'm just expanding. Give me a second. Okay. All right, that's better. Okay. So let's try to, yes, all right, agenda. We will talk about finance, as Daniela said, basics. You all know it's a complex thing. During the course of my career and my experience, the founders of the early stage startups or companies usually do not really think about finance as they should. So then the problems, start to accumulate. And then in 5, 7, 3, 2 years, when the investor comes or another founder, then we're dealing with problems that could be overcome if the founder, co-founder was thinking about this in the beginning. So this is what I want to talk about, a little bit of financial planning, the difference between revenue model and business model, and a little bit of startup funding, what kinds of startup funding or company funding, if we don't have to talk about startups, this applies to early stage companies, you know, in all sorts of industries. Okay. Now, can everyone please take a very cozy seat, like really feel good. And now do one big breathing. Hold your breath, breathe out, and hold your breath. You can close your eyes. And again, breathe in, hold, breathe out, hold. Breathe in, hold, breathe out, hold. In your own time, you may open your eyes, and I hope you're feeling a little bit more relaxed, not stressed, and you will enjoy my session. And ladies and gentlemen, if there are any, but I only see ladies so far, let's not forget to do these kind of exercise a couple of times during a day. I, as a mother of two, know what it is that's on our minds. We have like 3 jobs and like 1,000 things to do during a day. So let's just make that room for ourselves and then have the focus. Okay. So, all right. Why is startup finance important? So you have to operate efficiently and optimize when needed. Let's say you have initial capital, it has to be well managed. And it could be money from investor, it could be money from your parents, it could be your savings. Whatever capital we have on our mind, it has to be managed well. You have to know how much money you have for the next month, for the next year, for the next X months, okay? And you have to balance that cash well. You should measure and plan your business performance. So you have to have a budget, okay, to see if you plan profit or you plan loss, okay? If you have enough liquidity to pay your expenses. And you have to, or you want to increase the chances for getting an investment. Again, it could be a loan, money from another founder, your own savings. You have to know that you're investing well. So you need to have the best team to be able to grow and, let's say, sell the company in the end or develop it, you know, so that you have something big for your whole life. So you have to show the stakeholders, whoever it might be, that you have control over numbers and you're giving them reasonable projections, okay? Finance is one of the sectors of business that can make or break entrepreneurs. All companies need finance for daily operations. It's important for everyone. Now, effective startup financial management requires looking back and forward. This is very important because based on financial analysis in the past, a company can predict and plan steps in the future. So the key thing is the good setup, and then one can trust the numbers and rely on them, okay? Financial management is a dynamic thing and it changes based on what's happening within the company. You need to update your forecast based on the changes. What can happen? So startups tend, let's say, not to change their forecasts created in the beginning of year. And then let's say the monthly revenues increase during the course of the year. And it's important that you see it. It's important that you enter it into your financial projections, because then you see, oh, okay, I can buy some more equipment. I can hire another accountant or service provider that I need. If you do not update your financial documents, then it can cause you trouble. And imagine what would happen if the revenues would be decreasing in the course of the year and you would not be entering those into the financial documents that you are that you have or that you have in your plans. Then all of a sudden you come to a bank and you see, oops, I don't have any money and I cannot run the business. So it's very, very important. So good practice here is to do monthly or quarterly reporting and always update your forecast. Now, I have a quick question for team number 12. So first question, do you have a running business or you are idea stage?
For the beginning, I already bought a machine last week. So I made a small investment.
Excellent.
This week, I will start to produce my first quantities of dried fruits.
Excellent. So how cool. Perfect. So my question is, do you do any reporting, any financial planning?
Not yet.
Okay, good
because
question.
This idea was just for me, but after that I decided to do like a small business from this idea, and I already bought this machine, and this week I will start to produce.
Excellent. Congratulations. And don't forget, planning, planning, planning. Hopefully after this workshop, you'll know what to do, where to start. Thank you for the answer.
I was thinking about this just to make a small financial, to see what costs I will have. And next week I wanted to do this.
Excellent.
But I need that.
Thank you so much. All right, let's move on. Financial management and financial accounting. These are the terms you will hear or you may have heard, and it's not the same thing. This is what I'll describe now. Accounting is one of the key components of the financial management. Financial accounting is required by law and is mainly for the outside of the company. So shareholders, bank, board, or the team. Okay, those are information that you have to enter and are legally based. An accountant does not automatically know or do financial management, because financial management is something that you as a founder or the CEO of the company should do and should work with. Financial accounting is a tool of financial management. Now, I have a question for team number 14, Elena.
Yes, hello.
Hi. Do you have a running company or is it an idea stage?
We are still at the idea stage.
Excellent. So if you establish your company legally, do you plan to hire an accounting company, or will you do accounting by yourself? Have you thought about this?
Well, probably we will hire an accountant or apply to the services of an accountant that works with a few enterprises.
That is an excellent answer. Thank you very much, Elena.
Thank you.
Because here we have a hypothetical company. And here, let's have a look at how it should be. So the green little person in the blue circle, that is a CEO or a founder. So that's you. Okay. And then, you know, the bigger you get, the bigger the team. So ideally, you should have a CFO or a financial manager, COO, and CTO. But these two, we're not considering now. We're talking about finance. So after a certain time, you will need a person responsible for finance. With all due respect, it cannot be you once the business is big enough. It could be a person from your existing team. You don't have to hire a Big Four expert, like from Accenture or Ernst & Young and so on. You need a person who loves Excel and numbers, is friends with them, likes law and order, has to be a diligent person, can speak an accounting language. It doesn't necessarily have to be an accountant. Okay, that's important to understand. And understand your business. Okay, because if the person doesn't understand your business, he will mess up with the numbers. And I see Daniela nodding, so she knows what I'm talking about. So that CFO or financial consultant or finance manager, or it could be a super powered office manager, will put together three unlikely friends: an accountant, a lawyer, and a tax consultant. Okay, important matters in the company. Whatever happens, and it's of like a very big importance, always has impact from all these 3 points of view. So accounting, legal, and tax. So that person, or you in the beginning, has to kind of talk with all three of these friends, which will have different points of view, but you or the CFO has to know what's best for the company and then decide which direction to go. So it's very, in certain phase, so once you're growing, it's good to have an external accounting company with more people. Because if you have one, which in the beginning, of course, all the early stage companies or early stage startups, they have a friend who can do the accounting, or mother or aunt. Yes, in the beginning, if they do it for free, that's great. But once you start having revenues, once you start incurring costs, you know, once you start really rolling your business, then they might not have time. And if you have one person looking over your finance or in your business, what if, God forbid, something happens to him? You should have, you know, or rely on more people, just one. And then if you have a company, you know, they can, and you're, let's say they have some accounting problem or accounting question, more people can discuss the problem rather than one. So think about this. Many companies do not think about this in advance. They keep having just one person, then something happens, then the person has all the documents. Now the founder cannot get to the documents and we have a problem, Houston. So let's think about this before, and it really depends on what stage you are in. Okay, early, yes, let's save as much as possible. But once I have revenues, once I'm big, once I'm selling abroad, I cannot have my auntie as an accountant. I have to have a more professional company. Okay. So thinking of all these things that I just mentioned, this will lead you to insight into profitability of different products and services that you have. Okay. So which activities make money and which burn money? So which spend money? You will know. Profit optimization, that means, let's say you are coming to the end of the year and you see that your profit is, let's say, too high. And you want to have it a little bit lower because you don't want to pay taxes that much. What you can legally do is you can work with your costs. Let's say you have a contract that's over a longer period of time, so you can kind of, to the accountancy, you can shrink it. You can discuss it with your accountant. She will give you, or he will give you an advice, but you have to know that there are things you can do to optimize your profit. Then balance costs according to revenues. So let's say if you need a loan, okay, if you need a grant, if you need to get a grant, you have to show profit. Again, there are things you can do legally, and you have to know that you should talk to the accountant and weigh the options. Determine the break-even point. So you should know when you get out of the, I would say, loss phase. So when you just produce costs because you buy goods, you buy services, you buy the machines, you're trying to, build something. And once you start creating revenues, so money coming to your company, you're selling. So once this is equal, that means the break-even point. So you have earned already what you spend. And then the more you earn, that's where you are getting into your profit. So when you have your numbers in order, then where you can determine, or when you can determine that, yes, breakpoint, that's a thing to celebrate while operating your business. Then you can find potential leaks. And leaks meaning you think that let's say you have a sales manager who is costing you, I don't know, 5,000, but what he's selling is 5,000. So he's inefficient or he's not doing a good job. You have to change him. But how do you do it? You can see that this is happening when you look at his costs, or what you have to pay to him, and then what he brings. So again, you have to look at your business or at your numbers in the best way, so that it shows you what you need to know, how you will know that you're profitable or doing profit or not. Because there are ways to prevent it, there are ways to do it. You just have to know. And last, make wiser pricing decisions. So let's say you are selling something, but you're creating a product that you're selling. But what you're buying to create the product, the cost of the goods that make your product are, let's say, rising. So you have to sell your product for more, because if you don't, that you're shrinking your profit. Okay, so if you look at the things in this or from certain point of view, it will help you to decide and to know which way to go for you as an entrepreneur. Okay. Now, these are the accounting tools that I was mentioning. Let me ask team number 8. Julia,
Yeah.
Is it Julia?
Yes, and I have a colleague, a partner here as well, Zarita.
Hi, ladies. So do you have any idea what any of those 3 tools mean? Have you had that? Do you have a company, or are you idea stage?
We're idea stage at the minute.
Excellent. So my question is, have you seen these?
Yes.
Wow.
Of the 3,
Excellent.
but I don't know what I mean exactly, except balance sheet. I guess I know what that means, but cash,
Okay,
no.
tell us.
It's just where you where numbers need to match. It's a sheet of paper in Excel probably where you have your money that is coming into your company and money that is going out of your company. And it's kind of where you see that you are doing well or not.
That is a very good explanation, in fact. Thank you. Thank you very much.
My pleasure.
Well, you ladies, I see a great potential in your business. All right. So yes, we have a cash flow, a balance sheet, and profit and loss, P&L, or income statement. Okay, these are the tools that will be assessed by investors, banks, clients during due diligence process, before investing, or before you're asking for a loan, you name it. Now, I have one more question for whichever team that already has a business. Can Civita team help me? I need one team who has a business.
I think it's kimchi.
That's team number.
Let me check. I do remember them by what they are doing.
11, number 11.
Number 11.
Excellent. So team number 11. Hi, nice to meet you. I have a question. When was the last time you checked your balance sheet?
I think Daniela was very optimistic to say that I have a running business because we tested the market to see if the product goes well, but we are at the beginning of establishing our company legally.
Okay.
So we just recently hired an accounting company.
Excellent.
And,
Good.
Thank you. Finally. And we established a company legally with my partner, Tatiana. And at the moment, our accountant is waiting for all the documents from the government authorities, like for tax paying and everything. So hopefully at the end of the month, she wants to present the statement, the income statement, which is 0 at the moment.
That's fine. That's fine. Don't worry. It's supposed to be 0. You're just starting. That's fine. That's not a problem. Okay.
For now, it's just only investment. So we're like minus thousands of euros.
Well, it's not minus if it's an investment. Hello.
Yes.
All right. So my question is, so once you are established, and let's say you're operating for a year, how often would you check your income statement, balance sheet, and cash flow? What do you think?
Well, at the moment, like how we are working, it's every month, but I know that in accounting, it's like every 3 months. I think like the statement is made every 3 months, if I'm correct. I don't really know.
So it was almost ideal answer. So I would say, and I would suggest, and we will talk about each of these a little bit more. So the balance sheet is something that you can check maybe once in 3 months. That's fine. The income statement, I would be checking every month, I better. And the cash flow almost every week, if not even every day. This is how I was operating in the companies that I was taking care of finance. So you'll see what's best for you, but rather check it more often than not, because there could be things you wouldn't see. And then once it's closed, you know, the year's closed, then you can't do anything. And you might have some things that shouldn't have been there. So it's important that you check. You check over your accountant, because as we said, the accountant is not a financial manager. That's not their job. That's the job of the CEO, or then the person that is helping. It's like the best friend of the CEO in the company looking over the finance. Next slide. All right, we have a little quiz. So I would like to see a volunteer, and I'm looking at team number, let's say 17. Do we have team number 17? Hello. Could you please read and guess which is which?
Okay, balance sheet shows how much cash company has brought in and how much.
You can read for everyone.
Okay, balance sheet shows how much cash the company has brought in and how much is paid out. Shows what a company has earned, what is it has paid, and what's the resulting profits or losses over a certain period of time. Shows what the company owns, what it owns, and what it's worth. So I think that it's the third one, the last one.
So balance sheet is, what do you think? The
last one.
Okay. The income statement.
The income statement is shows what the company has earned, what and what is it has paid and what's the result profits, and statement is the first one.
Now, Tara, a moment of truth. I think you were totally correct. Congratulations. That was excellent. I heard a baby there. So you ladies
Yes, I'm sorry for the noise.
It's not sorry. I have two babies. I was working and like breastfeeding my baby at the same time. It's not a problem. I totally understand. I was working during both maternity leaves. I wouldn't even call it maternity leave. So thank you. It was great. It was great. And you see what are we capable of, ladies and gentlemen, right? That's why the queen. I mean, I totally understand. So ladies, please, and gentlemen, if there are some, please remember this. This is something that doesn't really, you don't really need this for your day-to-day business, right? You will not be looking at it unwillingly, but you have to check it. You have to know. There are so many important information that show how your business is doing, okay? Where is your equity? Where are your assets, liabilities? Who's paying you? Who's not? What's happening with the loan? Okay, there's so many things that need to be considered in terms of accounting and managing the accounting and finances that you may lose the kind of the sight because you're overwhelmed by, you know, finding business, looking for business and dealing with clients and customers, but the health of your company, okay, is really important. So please make sure you check these documents and ask your accountant questions before you have the financial manager who will be then asking the questions and then giving you the report. But in early stages, ask questions. Why is this like this? Why is that like that? Explain. Can we do it differently? Can we do this? Can we do that? Okay, give them questions. You are entitled to ask and to know. Okay. Next, balance sheet. Okay, so I would love to call out team number 7. Do we have team number 7?
Yes, of course, I'm here.
Hello.
Hello.
And my question to you is whether you know these 3 words, magical words that are in those whatever blue or orange and red squares or whatever that is. Have you heard about them? Do you know what those are?
I think maybe I have heard it in Russian because my language native is Russian, and English. Unfortunately, I don't know these 3 languages, but I know what is this balance sheet. I have seen it at the work where I'm working, but these 3 words in English, I don't know.
Never mind. I did learn Russian back in, I mean, long time ago. but the only thing I remember is "Здравствуйте," but something at least. So unfortunately, I cannot translate that for you, but let's explain what that is, okay?
Yes, thank you.
So we have balance sheet. We have one side, assets, and the other side, liabilities and equity. And as you can see, these two sides have to be the same. They have to be equal. This is very important to understand. This is how the dual accounting works. So an asset is an item that the company owns. And the company expects that this asset will turn into future financial profit at some point. What are the examples of assets? Cash, accounts receivable, inventory, building, machine, furniture, vehicle. These are the examples of assets. Then we have liability or liability, and that's something a company owes. So it's usually a sum of money. So it can include loans, accounts payable, so money that we owe to somebody, mortgage, and some accrued expenses. And the rest is called equity. Does anyone know what an equity is? Has anyone of you, ladies and gentlemen, heard the word equity?
Yes.
Yes?
I'm not
What
sure
is
what
it?
it means. It's really, maybe Zarita can help because she's, from London and she heard that word more often than I. But I've heard it in the context of someone owning equity in someone's business.
Mhm.
That sort.
Does it relate to a shareholder owning a percentage of the company, and the shareholder puts in an equity for the amount that they own that then turns into working capital for the business?
Oh my
You
God.
can take over. You can take over. I mean, I'm going.
I've been watching too much Dragon's Den. That's what it is.
Excellent, excellent. Thank you so much for that explanation. That indeed is what you just described. So it's the capital that's being kind of contributed by shareholders. So whatever you put into company and is supposed to be in the company, the cash or know-how, that is called equity. It also consists of retained earnings, which means the profit that you earned, but you didn't pay out. So it accumulates and it creates the value of your company. Ladies, excellent. I don't know, Daniela, do we really need a workshop? Am I like, I feel like these ladies know everything.
Yes, I have the feeling that we don't need that anymore.
I know.
That's
I
it.
can go.
We should employ everyone here.
I know. We should. I'm happy. I'm really happy, ladies. So I have another quiz for you. Can I call out team number 9? Team number 9.
Yes, I'm here. Hello.
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 Can you guess which of the gray rectangles on the right belong to the middle part rectangles? And it's fine if you, yeah.
Direct, no, it's indirect operating cost. I have to see which ones are from the right columns. Is that?
Yes, so on the right, there are 3, there is, what is there? The operating income, gross profit, and net income. And they should go to the middle section, but in a correct kind of position. So can you guess which goes where? So when we subtract direct operating costs from revenue, what do we get? And then when we subtract indirect operating costs, what do we get?
Okay. So we are getting from the revenues when we are extracting direct operating costs, we are getting operating income, I think. No?
Go on.
And then I know that when we are taking the tax, we have the net income, the last one. And after the indirect operating cost, we have yes, after the indirect operating cost, we have the operating income. And after we are extracting the costs of the indirect, we have and the taxes, we have the net income. And from the revenues, when we are taking out the direct operating cost, we are getting the gross profit.
Well, let's see how it works. And this was tough. This was difficult, ladies. Let me say that. Maybe I wouldn't even know. No, I would, but maybe not. Who knows? Thank you for the answer. You tried really well. So profit and loss, P&L, as we say in short, or income statement, shows a business financial health at a single point in time and is usually prepared at a month's end. Okay, but do not expect it to be fully ready. Okay, you have to collect all the issued invoices for the particular month, all the invoices that you received for that particular month. And only then, and you know that it takes time until they come. So you have to collect all of them, give it to the accountant, you or the financial manager, and only after that, they can have your income statement for that particular month ready. The sooner you collect all your documents for your accountant, the sooner it will be ready. Don't forget this. Please have one place where you put the document. These are my issued invoices. These are my receipts. These are my received invoices. And the accountant will love you. Trust me about that. Because the worst thing that can happen is when they get a pile of some unrelated documents and they don't even know what that is. Okay? You can even put a note for the accountant. This is something. Maybe you don't know, but this is something. Okay? That's going to help be the accountant efficient and enter the data correctly into the accounting system. And that's important because then no mistakes and you have the real results and you know what's happening in your company. Okay? P&L doesn't show you, or income statement doesn't show you how much cash you have on your account. Okay, this is important to understand. But it displays your profit or loss, which, as I mentioned, can be designed or altered legally according to your needs. Depends. Remember, we talked about bank loan or maybe an investment. And you can divide your revenues according to customer, according to product, according to a market. Okay? You can split your cost for services into external professional services or internal consultants. You can play. And once you do it, the accountant will do it your way so that they give you the information that you need to operate efficiently. Okay? Now, let's move on. So this is just a quick intro because I don't want to load you with like too many information, but you will hear gross profit margin and operating profit margin. So you see that it's practically the same, but it's calculated as a margin. So it's a percentage. So the gross profit margin defines profits as all income that remains after the accounting for the cost of goods sold. COGS. This is also COGS. This is something you will hear a lot, and you know those are costs of goods sold. So the costs that are related directly to the product or service you're selling, that is creating your revenues, okay? And then the margin. So the operating profit considers all overheads, operating, administrative, and sales expenses. So these are indirectly related to your product. Okay, it can be marketing campaign. It could be, I don't know, your marketing person, who you want to pay or who you're paying. So, and it includes amortization and depreciation. Let's move on to cash flow. So I would like to call out team number 4. Can I have team number 4, please?
Yes, we are here.
Hello. Hello.
Hello.
That's a lovely voice. So what do you think cash flow is?
The cash flow, let me remember. It's about the liquidity that we have to operate with him in the process of making some operation in the business. I don't know if I do it right.
So,
If I said right.
Exactly. So cash flow is kind of provides you with information of the cash flowing in your company and cash flowing out of your company. Cash. Okay. This is just so you know, and you have information. And when you hear about cash flow from operating activities, so you know you have revenues and operating expenses in this cash flow or this kind of cash flow. Cash flow from investing activities. So you have sale and purchase of assets there, for instance. You sell a business, building. And cash flow from financing activities, issuing shares, raising debt. So this is kind of a little bit more difficult. You will not need to do it in the first years at all in this way, but just so you know that something like this exists, okay? And when you see it, you'll know. Now, very important thing, and now I need your full focus. So income statement versus cash flow, okay? What we said is that income statement doesn't show how much money you have on your account. And cash flow, if we are positive in cash flow, we can be in loss as a company. Okay, so these are two different kind of tools that show different things in the company. So, income statement, what you put there are earned revenues and incurred costs. What does it mean? Does anyone know when do I have earned a revenue? Can I please ask team number 3 to provide me with the answer? And there is no right or wrong answer. There is just an opinion. Do we have team number 3? Either it's muted or
Angela Suhin. Well,
maybe
I
BD.
guess
Maybe BD. Never mind. I have a circle. Was there something?
No, there is nothing.
Okay, team number 5, please. Do I have team number 5?
Yes, hello. Can you please just repeat your question?
Yes, so when do I have the revenues earned? Like, what does this mean?
Oh, revenues earned.
What do you think? What do you think when you hear this?
Well, let me just guess. So my client or my customer paid for the service. So the money that I received for the service or for the product.
And how does the client pay? Based on what? How does he know how much he has to pay you and where to pay you?
Yeah, so we have established cost for the service or for the product, and we have some channels for payment. I mean,
Yes.
PayPal, cash, or bank account, something like this.
And where does he find the information?
Okay, on our platform or website.
Yes. And website, is he just opens the website and there it is? Or does he get any kind of special document, which we call
my voice?
Invoice. There you go. Ta-da! Excellent. Thank you.
Okay, thank you.
Team 10. Excellent. Excellent. And team 5, it was great. But there is a little step that's like in the beginning, and that's the invoice. Exactly. Once we issue the invoice, so we write, please pay me 5,000 euro for this service in 14 days to this account. Invoice. That's when we have revenues earned. And this information goes into income statement. So you give the invoice to the accountant and he writes or enters into the system and you have revenues earned. Okay. Now, second, incurred costs. Can team number 10, who gets the invoice, tell me what is when the costs are incurred? What does it mean?
I mean the costs are incurred when we produce something. For example, if we produce some products, so we have all the raw materials that go to the production. Also, as included.
So the material. So how do you get the material that you need for production of your product?
Yeah, the raw materials, also the salaries.
How do you get it? How do you get it? How do you get the material? Yeah. How do you get it? Yes.
I buy it from
the invoices from.
I think you mean the debts, all the debts that we have.
No. How do you buy it? I heard something.
Invoices. Also, we have invoices from.
Yes, an invoice that you receive from
the invoice that we have
your
to pay.
supplier. Yes, exactly. Yay, thank you. I had two teams cooperating. That is wonderful. It's a teamwork. Yay. Oh, cutie. Oh, no, don't show me little babies because then I cannot control myself. Oh, so cute. That's going to be another entrepreneur, right?
For sure.
Please do not distract the trainer.
I'm sorry. I'm distracted by cute little babies. And that's a very cute little baby. Okay, I'm so happy. Exactly. So we have issued invoice and received invoice. Once I receive the invoice, the accountant enters it and we have cost incurred. Okay. So this all shows in the income statement. Have we said anything about cash so far? We haven't. I see heads turning from one side to another. And do you know that in Bulgaria this means yes? I thought so. I thought that you knew. Normally people don't, but I know you would. All right. So no, we haven't been mentioning cash at all, which is the other picture that you see. Statement of cash flows. We have received cash and paid cash. So we mentioned the invoice that we send out to our customer who will pay the money into our account. That is received cash. Two different operations, two different things. I have an invoice, I issue it and I send it to the customer, and then I receive money. So receiving money, receiving cash, shows in the statement of cash flow, in the cash flow. Paid cash means I buy some machine, as we mentioned, some material that we need, okay? And that means I have to take out the cash out of the bank account or the pocket and pay it to the customer. This is, or the supplier, paid cash. Two different things. Okay. And now I have a very difficult exercise here. So if you can all focus now. So imagine on January 13, whichever year, 2023, a customer bought your goods worth 2,000 euro. A customer paid the invoice on May 5th. So how would you or your accountant journalize this transaction? Simply, when will it be shown? What? In income statement and statement of cash flow. Okay. So I want to know which month, where. So I'm going to give you 30 seconds. And then the boldest queen or king can speak. Okay, focus. All right, you don't need 30 seconds. Okay, so who's ready? Who's the boldest queen?
I can say.
Okay, team number 7, I love that.
Check the chat as well.
Yes, I think it will be journalized in May because the money came in May.
And where? Income statement or cash flow?
It depends on how he did paid. If it was with cash, it will be journalized with cash and cash flow statement.
What month? What month?
The same in May because money came in May. So I think it is important to show money when they came because January was closed. Like a balance, like a income statement, statement of cash, it was closed and given to a statement, yes, like as an information. And then when we receive money, it will be like debt for this person on January. We will show it in January, but it will be like a debt, I think, yes, it's correctly. But when he will pay, it will come in journal and will be journalized and closed in May.
Excellent. Thank you for the answer. Anyone else wants to say something or wants to share what he came up to?
Yes, I can say that in probably in January, there will be a minus balance or something like that. And then you include the invoice for May. So because that's the date or the month when you receive the payment.
So you receive the invoice, receive the invoice or you issue the invoice in January, right?
Yeah.
So where would you, the information about the invoice, where would you, like earned revenues, we said issued invoice, earned revenues, where would you book it? Which of those two accounting tools? Income statement or cash flow? Are we talking about cash? No. Issuing invoice? No. Exactly. So that would be the
income statement in progress.
Exactly. And once the customer pays, yay, that's the best when they pay. In May, where would it go? We're talking about cash. Who knows?
In statement of cash flow.
Exactly, because it's cash. We have the cash, so cash in, cash out, real cash. Okay. I hope that this exercise showed you the difference, because this is something that the entrepreneurs in the beginning sometimes don't really kind of get or think of that. Okay, I am issuing the invoice, but the customer has not paid yet, may not pay, may pay in half a year. Once I issue the invoice, it doesn't mean that I want it all, because I need cash. Okay, so you have to think about this. What happened to me in the course of my career, let's say that, the entrepreneur, the founder was working and wasn't checking that, and he was like issuing invoices, and he thought, oh, I'm doing so great. And then all of a sudden, he realized no cash at bank. Why? Because the customers were not paying for weeks, even months. And he didn't check it. So he had no idea. He ran out of money and he had to close the business. Because he didn't know that he was supposed to check that. Okay, so it's important. Check whether your customers are paying. And if you have to pay something, you have to know, do I have enough money? If I don't, talk to your supplier. They understand that sometimes the situation is bad and you can't pay on time. If you're open and talk to him or her, you can always come up to a mutual, agreement, and it's better. Everyone knows that, doing business is tough or can be tough. And they were in the same situation maybe as well, so they can understand. So try to be open, try to be really talking to your suppliers and customers. So customers, can you please pay? Yeah, sometimes you can understand that that it takes time for them to pay, but you have to kind of have the conversation. And they try to pay your received invoices, the cost that you need to pay for, as late as possible. Okay, but within the limits. And if you don't have money, because first you need to pay your people, that's important, your team, right? So then you can discuss, can I pay later? Can you give me 2 more weeks, please? Okay, so this is important. Rather be open than hiding. And then if you want to solve something, you will not be able to, because the supplier might not want to, might not trust you. Okay. So this is the cash flow statement, an example that I personally, because my background is finance, so I was a CFO for a couple of companies, and cash flow was something I personally was looking at weekly, if not even daily, like every other day. I have information, okay, this customer has canceled the order, even though I was counting on selling him. Immediately, I have to change it in the cash flow. Or, hey, we have a new customer. We weren't counting or we weren't reporting or planning to have this customer. Let me enter it into the cash flow right away. So as you see, you can divide it into months or weeks. Me personally, weeks, it's too much of a hassle. So I always switched to monthly kind of cash flow statement. And then you have cash inflows, so your sales. You can divide it, customer A, customer B, C, and so on. Or you can have product 1, product 2, 3, 4, 5, and so on. Or you can have market 1, market 2, whatever. Or you have salesperson. So you have salesperson A, salesperson B, salesperson C, and that's how you can also see how everyone is doing in terms of cash. And then you have cash outflow. So, you have to pay utilities, okay, your rent and so on, wages, professional fees, van or marketing. And you plan in advance monthly payments. Once it's changed, you change it. Okay? Don't forget, this is very important. All the financial kind of documents or tools are like living organism, I would call it like that. Let's be very precise. So you have to adjust. Every time you have a new information, put it there. Make sure you count on it. I lost the customer, I have to immediately wipe it out of the cash flow. Because if I keep having that revenue there, I'm thinking, wow, I'm doing so great. And it's not the case because I lost the customer. Okay, so this is very, very important, ladies and gentlemen. And as well with the cash outflow or the expenses, we can call it expenses as well. Here, my way of doing is worst case scenario doing. So I rather put all the costs, all the expenses that I can think of, to be able that I don't forget anything. And it's better when, I see, oh, okay, I didn't have to pay this. So it's better, I'm going to have more cash, but just count rather with the more cost than less. And the other way around, revenues or incomes. Here, I would say, very conservative. So when I'm not more than 50% sure that I'm having the revenues, I'm not putting in there. I'm not. So that I'm not like, oh yeah, I'm fine, I have a lot of cash, and I don't. Okay, so try to think of this in this way. And then on the very bottom, you have cash summary, let's say, and then closing balance. And you have to check, like you have opening balance. What do? You count all your accounts in the bank that you have together. You have one, maybe you have five, I don't know. But you have to, like, first of the month, you have to put it there, how much you have in the bank and in your cash register. So all the cash you have on the first of each month. Then money comes in, money goes out. And then the closing balance has to be the same as in the bank and your cash register. Is this clear to everyone? Because this is very, very important. All right, a little exercise, which I love. Can team number 18, do we have team number 18? Team number 18. We don't? Okay. Do we have team number 19?
Yes, hello.
Hello. Hello and welcome in our joint team session. I have a question. Can you tell me, like, imagine that you have your company and you're doing your cash flow. So give me 2 examples. What would you think of, or what would you do with your cash flow? What would be important for you in terms of working with cash flow? Just out of what I was talking. It could be anything. I'm just curious what you think should be important for you.
For me, for our business, it will be important to plan cash flow for buying all the materials that we need, goods. Our business will imply jewelry, sale of jewelry. In this case, we need cash flow for buying jewelries, cash flow for paying money for delivery, for packaging, for salaries, for people that will be implied in discussing with potential clients, with that will yes. And another could be also cash flow for paying for deposits, or where we'll stock all the our jewelries.
Excellent. You know, I really love jewelry, so best of luck with the business with jewelry. That's going to be awesome. Thank you very much for the answer.
Thank you.
And coming to a break, ladies, we're entitled to a sip of coffee, which I have here. It's cold now, it's iced coffee now, but never mind. So we have 5 minutes to kind of refreshen ourselves, water, coffee, you name it. So in 5 minutes, please do come back. I would really love to see you.
Thank you.
Thank you.
Has everyone had a good sip of coffee or tea or water?
Yes, thank you. Did you?
So let's see if we can start and continue in the session.
Let's start.
Let's start. All right. So let's cut to the chase. And after having the sips of whichever tasty liquid we found at home, let's talk about why the financial planning is important. And this is, the next slide is one of my favorite slides. And for this session, I have adjusted it a little bit, and you'll see how. And then I realized that there will be also gentlemen present. So cash is king, I mean cash is queen, but now we can say it's king and the queen. So let's think it's both. And even though it might seem as an obvious thing, every entrepreneur who started the business and who went a long way will tell you this. Cash is the king/queen. It's a literal need. What you have on your account, that is what you have. What you don't have on your account, you don't. You can't use it. Okay, you can pay your team. You can't pay your accountant. You can't. So the most important role or task for the entrepreneur in the beginning is cash. Because later, in later stages, you're bigger, you have more revenues. What you can do is you can loan money from bank or find an investor. But in the beginning, you need cash. Okay. So the main focus, even though we discussed the tools, right? The income statement and balance sheet, important documents. But the main focus should be on cash flow. Okay, that's why I said every week, look at it, check it, adjust it, be flexible, plan, execute, okay, and check, important. The kind of one of the biggest reasons why startups or whichever companies or early stage companies, why do they fail, is because they run out of money. And it really, really, really happens. As I mentioned that example a little while ago, when you don't check, let's say, the money that you're supposed to be paid on your account, and you don't know that the customers are not paying, and all of a sudden you have zero on your account, there is no way you get a loan in 2 weeks or find an investor in 2 days, okay? And even though you have a great flourishing business and great team and everything, once you cannot pay, there's only so much you can do. So this is really important. So you really should know how to plan and manage your cash flow, okay? And this is a very important topic for me, and to be able to kind of convey this message to you properly, I want to talk about it a little bit more so that you understand the importance. So how much money do we expect to spend each month? Okay. Does anyone know the startup term that means how much money you spend a month? Does anyone know? Let's say team 16.
Hello.
Hello.
Hello, I'm here. Do you hear me?
Yes.
Okay, great. The question was, what is the name for the money spent each month for a startup?
Yes, there's a fancy word for that.
I'm sorry, I don't know it. Maybe a debt, but I don't know it.
No problem. It's called cash burn. So how much money you burn?
You burn each month. Okay,
yes,
it's understandable. Yes, especially at the start.
How much money you have to run the company is called runaway. Okay, runaway. So just so you know the fancy schmancy terms, but you don't need to know them. But if you hear them, now you know what they mean. So we need to know. Thank you, team 16. Thank you very much. That was very bold.
I'm sorry, I did not help you so much.
No, I mean, that's not. It's important for you to kind of start thinking about it. And trust me, you'll know forever now. Runway and cash burn or burn rate. Burn rate.
I have to admit, because my business is connected with services, consulting. So the burning initial process, not that much as when you produce something, because you need to put a lot of income when you produce. And equipment and so on, but for the consulting is not that burning, let's say like this.
Yes, you're so right. This is easier in terms of the initial investment, exactly, because you don't have to buy goods or some material to produce something. Exactly. You have a bit easier start, yes, in terms of money. So best of luck to you. So another thing. When are we running out of money? Okay. What are the revenues? What's the profit? What's the loss? Okay. And how much we expect them to grow. We want to grow, or sometimes we don't grow, but then we see if we have good plans, if we have good processes, we see if there is a danger or some issue that we need to solve. Okay, how much money do we need to ship next version of the product, right? How much can we last before we start getting enough money from customers? All these things can be told. Those are like stories that could be told by those financial documents, by those tools of the financial management. Are we going to hit milestones with the current cash in the bank and burn rate? Burn rate. Now we know what a burn rate is. Can team 2 tell me what the burn rate is? I see Allah. Is it? Team 2. Muted. Do we have you?
We have different parents.
No, we don't have team 2. Okay. So team 20. Yes.
Hi.
Hi. Welcome.
Hi, Eva.
Nice to meet you.
Yes.
So the question was?
What is the burn rate?
Exactly.
Okay. Let me suppose that the burn rate is actually, I don't know.
I think it's the how much.
Oh, right.
Yes, I'm here also. Hello. I think the burn rate is how quick we are spending our money. I think.
How fast we are burning,
spending our money.
Spending
yes.
money, and it's usually in monthly terms.
Yes.
So we have 3 months. Like the company's burn rate is currently 3,000 a month. So it means to operate, the company needs 3,000 euros per month. So to pay everything. Excellent, nice.
So in basic, this burn rate, if we name it, or if we say that we have a $2,000 burn rate for a period of 2 months, for example, or 3 months.
You usually say it, if you say burn rate with some amount, it usually means it's in a month, in 1 month.
Okay, okay, understood.
And then what are the alternatives? What we can do? Can we hire another engineer, right? What if we spend additional 2,000 on marketing? What's gonna happen? So if companies do not do their homework and do not enter this kind of information properly or plan them, they do not have relevant information for the bank, for investors, or for their shareholders, or for the team, because team also has to be informed about the finance, about the health of the company or struggles. Okay, sometimes, you know, when you're struggling, the team, if you have a good team and you share the struggle, somebody from the team can say, okay, I will wait with my salary. You have to pay me in 2 months. Okay, and it's better to do this rather than hiding it from them. And then all of a sudden they don't get paid. And then, you know, you have not good relations in the team. Okay, because what creates the value of the company? What helps you develop your company is the team, you and the team. So we as entrepreneurs, as founders, CEOs, have to think about the team as well. Very important. Okay. So so try to kind of think about the process. Try to, you always have to ask for information or want to find information that are important for you, that you need to run the business. And it's flexible. You just need to think about it. So another kind of way of looking at the importance of the financial plan. And now I would like to call team number 5. And Ala,
yes.
Hello, thank you, thank you. And I would like you to kind of just look at these things and tell me what would be important from these questions for you and your business.
Okay, from the beginning, I would say that we're not talking about additional money to raise, yes, because it's the beginning of our business. I guess it's very important to plan our expenses and our revenues. I mean, how much money we must spend paying all kind of things that you already told us or showed that are important, and maybe to try to estimate how much money are we going to receive from our customers, so we can somehow have an idea what is our cash.
Excellent.
Thank you.
Please, thank you so much for the answer. Please think through. Think through, ask yourself, and then look for the answers. And try to really build up the process so that it makes the business, running the business easier for you. And let me just conclude the financial plan talking, but as you see, I think it's really important. So that's why I keep repeating things or trying to make you see how important it is. It's challenging. Mostly the entrepreneurs or founders think it's a waste of time because the plan can be so inaccurate, right? But you don't have to obsess about getting this exactly right. Yeah, it's likely wrong because, as I said, it has to be flexible. Things change, you know, customers change, you change, team changes, the plan changes, the pathway which you're going is changing. But you know, without a plan, a clear plan that you set, it's very hard to know if you have enough cash. Okay, and then kind of think of more scenarios that would help you to manage your company successfully and to hit your next milestone. Okay, so financial plan, this is what I love, helps to sleep better at night, even if it's just a guess. Okay, so please think about this. I have seen so many companies, you know, so many income statements and profits and losses and cash flows, or have not seen in a proper way, and then problems that arise or have arisen from you know, not paying attention enough to the financial planning and all the tools that if they were thinking about it before, they could have avoided mess. Now, these are 8 commandments for early stage startups or companies that I want you to remember and say it as a prayer when you have time. Okay. First, and you know what? Who would like to help me reading this? Oh, team 13. Do I have team 13? Team 13? No? Okay, then team 15.
Hello.
Oh, hello. Nice to meet you.
Nice to meet you too.
Could you please help me reading these 8 commandments out loud so that we all remember forever?
Okay. So the first one, establish clear rules on how to manage your accounting. Second, set up a friendly system of paying your obligations on time. Third, establish your payment collection process. Fourth, develop your financial projections. Fifth, build your budget. Sixth, establish clear rules on payroll solutions. Seventh, know your tax obligations. And eighth, decide whether you need to pursue outside funding. Okay.
Thank you very much. This was loud and clear. I believe you will get my presentation. Print this out, put it somewhere, you'll remember me forever, and these 8 commandments, okay? And hopefully they'll help you in the course of doing your business in a good way. Now we have a warm-up session. This is my favorite part. So whoever can and is not in the car driving as team number 20, please be careful and don't do this warm-up session. You are allowed not to. So if you can please stand up, okay, because we have to kind of shake our body a little bit so that we don't fall asleep. So if you can please stand up. Yes, team number 12. Come on, stand up. I know it's hard. I know.
I'm sorry,
I with the baby. Oh, but the baby's gonna feel good because we're going to spin. So this was great for my babies. I was spinning around with them. Oh, so cute. Again, oh my God, so many babies. Oh my God, I'm distracted. All right, what we're going to do, ladies, is we do 3 spins to the right and 3 spins to the left, and then 1 little jump. Okay, ready, steady, go. 1 spin to the right, 1 spin to the right, and the last spin to the right. See, the babies love it. And then 1 spin to the left, 2nd spin to the left, 3rd spin to the left, and jump. Thank you so much. Thank you so much, ladies. We can all see it. I hope the babies loved it too. My babies did love that. Thank you so much. I hope we feel energized a little bit because it's been tiring. We have a few more slides to go, and I promise I'll be quick because here I just want to quickly let you know what is the difference between business model and business revenue. You'll be hearing this, you'll be asked this question. Maybe you'll have some other workshops, but just so we understand the basics, okay? Oh, let's say team number 11, Dana. Do you have any idea what the difference is or what are those? And you're muted. We want to hear your lovely voice.
Sorry.
No problem. This happens a lot.
I have no idea, but I will
Fine,
try to guess, I think. Business model is, I think, another business like mine. So it's like I need to look for other companies that are similar to mine. I think.
Okay.
I think it's a company strategy. Strategy to develop whatever you are developing.
I couldn't hear properly, but I heard strategy, and that was fairly right, because business model is a plan for a successful operation of a business, of your business. Identifying sources of revenue. So what is going to make me money? How am I going to be rich as a queen?
I'm sorry, is it like a business plan? Or
this
not?
is a business model. So how do you get the revenues? Okay. Who are you going to sell it to? Who's going to be your customer? What is your product? What is the value that you're giving to the customer? And then details of financing. Okay, so it's a strategy, how you operate your business. Okay, how do you generate the value?
It's related to what we have talked in our first day, right? About who is your customer, who is your target market. Yes, it's the same. We are going to sell the product or the service.
Yes. Here is a very nice, cute little picture that will hopefully help you understand what the business model is. So it's at the heart of any business, it's a strategy. So firstly, we say who, the who. Who is the customer? We need to understand the customer. We need to be able to describe the customer. Then we have the what. So the products or services that you offer and the benefits you create, the problems that you solve. So that's the describing of the what. Then we have the how. So what the key partners are, the key activities and the key resources of the business model. And then the why. So the purpose and the profit formula. So why do we earn more money than we have costs? And big part of that is revenue model. It's one element of the business model.
How to make money.
Exactly. How the company generates the revenues. Okay, so business model or revenue model explains the revenue earning strategy. So who pays? What do they, the who, pay for what? How are you paid? How do they pay? And how much is paid? Okay, so, and the examples of revenue models, for instance, is a subscription fee, or direct sale, or web sale, or it's ad-based, so advertisement. Somebody places an advertisement on your website, and that's how you get paid, or through affiliate model. So these are just basics, so you understand that the revenue model is just one part of the business model. And you have to answer and you have to know these questions. Once you get to a competition or demo day, or you will present in front of investors or potential, I don't know, clients, then they'll ask 100%, what's your business model? What's your revenue model? You should be able to understand and to explain. Think about this. Think about this. And then it kind of makes you think about the strategy, because you have to answer all those questions. You have to be sure about the answers. So keep asking them, and you can change it. Once you see it doesn't work, you can change it. You can change your business model. You can change your revenue model. Okay, it's not written in the stone, but think about it. Okay, now this is the last part of my presentation. Here, I just want you to see what kind of startup kind of financing are there in the world. So how can you think of getting money other than revenues for your development? Because the time may come where, yes, you see you have customers, yes, you see you have revenues, but you see that there is a huge potential to grow more, to go to other countries. And for that, you would need an investment or additional money. So anyone has ever heard about any of these words that I have in pretty colors? That green is just like Daniela's hair, but not.
At the first session, we were taught these terms.
Excellent. So anyone knows what an angel investor is?
An angel investor.
Person or a businessman who want to invest in your business. It's like benevol investment.
Excellent.
Angels are rich people.
Exactly. There is a fancy. Exactly. There is a fancy schmancy word that they are called high net worth individuals, which basically means very rich people. Exactly. Who understand and who want to risk. Who want to risk, because of course they risk their money in the early stage of the process. Now, who knows what the word dilutive is? Can anyone tell me what the word dilutive is?
Something that you should show to them how you are investing your money. Dilutive is not to show how you're investing your money, and non-dilutive is to show. I mean, with the reports, I think this.
Maybe dilutives are more flexible investors.
So what it means basically is that when you kind of angel investors, venture capital, and crowd investing, that's a dilutive form of financing or investment, because they all give you money, but will they give you money for free? What do they want for their money?
Results?
They could want. They want some shares in the
results.
Yes,
Shares.
Yes, shares, results, of course. They will want results, but shares. So in order to get that kind of money, you have to give up your shares, part of your shares in your company, hence dilution. It means you're losing your shares. You have to change, you're having less shares, less of a value in the company, so you're diluting. Non-dilutive means bank loan, crowdfunding grants. You're not giving up any share. hence non-dilutive. So before thinking, okay, you have to know and have to be sure that you are giving up shares of your business or you're not giving up shares of your business. Now, who knows what the triple F means?
Friends and family.
I'm sorry, come again?
Friends and family? No?
Friends,
Yes,
fools, and
family.
Exactly. Family, friends, and fools. Exactly. That's the term because they give you money in the very beginning. And if it's not your friend, if it's not your family, then it must be a fool to give you a fund in the beginning of your business because there is absolutely no proof if it's going to work or not. So it's a funny term. I like it. And the personal funds means is your funds. And they're kind of in the middle because your mom can give you money without wanting any shares, but she might want some shares. So it's kind of in the middle. Okay, venture capital. Let me call for team number 15. What is a venture capital? Do we have team number 15? We don't. Okay. Let me call team number 6. No? 10?
Yeah. Hi.
Oh, hi. Hello.
I think venture capital is the capital that we have ready to spend for the beginning.
Mm-hmm.
I mean, the risky capital, yeah.
Risky, exactly. So it's money that investors commit for investment in early stage companies. Okay.
Yeah.
Venture means risky. Why is it risky?
Because you
Why
don't
is
know,
it risky?
don't know for the beginning how it will be in the future.
Exactly. You're so right. Aren't you a venture capitalist? No?
Maybe yes.
Maybe yes. You never know. Okay. Thank you very much for the answer. It was correct. So when you hear venture capital, VC funds, that means venture capital funds, venture capitalists. That means risky capital, investing in early stage in a company that you don't know how it's going to be doing. So the risk is high, but also in return, the profit, if all goes well, the profit will be or can be tremendous, but it's risky. So hence venture capital. Now, crowd investing, again, just so you know this term, anyone heard what is crowd investing?
I'm here. I'm team number 6.
Yay! Would you know what crowd investing is?
I would say it's something similar, but not similar with crowdfunding, because when crowd invests, they will also have a part of it, or you give some benefits of your business to them.
Mm-hmm.
Maybe products or maybe services or something like that.
Yes, so in fact, it's a small amount of capital from a large number of people that fund your business. So let's say you have 15 crowd investors who each give, let's say, 3,000 euro, but they're kind of, they form one company that invests. So you don't have 15 people in your company, but just one company that's like crowd investing company that is investing in your company. And correctly, crowdfunding is a way of raising money to finance projects and businesses. And they collect money from a large number of people via online platforms. It used to be a great way of raising capital without needing to give out your shares. Usually when people gave you money, they were expecting the product, and they usually gave you more than the product cost. But now it's really difficult. What I heard or read lately is that you need a lot of money for marketing, to be successful on the platforms. There is so much, but you never know, you might want to try it. And then we have bank loans. Who can tell me how is the situation in your country with banks kind of supporting early stage companies? Are the banks in favor, or is it difficult for you to get a loan when you're starting?
There are several companies, smaller, so there is non-banking company, and banking institutions. So basically, you'll have different kind of support at the specific high level, usually a percentage. So the riskier the startup or the business is, the higher the percentage, of course. Definitely, there are some hubs that provide our investors, but not really good yet at the level of angel investors or equity, for example, as people are not really keen on several agencies, international ones, that develop a sort of support that will go for the specific startups. And at some point, there are also projects like ours that actually are interacted with bigger companies that provide sort of a starting support. And well, this is actually what we are expecting as well at the end for 5 of the companies that will be formed and hopefully will develop further on. But again, it's still a difficult situation. We really hope after the elections, the things will get much more clear and stable.
When is the election?
11th of July.
Okay. Yes, we had tough elections ourselves in Slovakia. We were hoping the situation will get better. It did, but also it didn't. So best of luck that your election will go the best way. And thank you for the explanation. Thank you very much. So hopefully the situation will get better, because one thing that's important is for the private sector and say banks to support early stage companies, because those are the ones that are flexible and then can and will bring value later on. And you all know that. And the last form of financing are grants. So the grant or a grant is a way the government funds your idea or project to kind of stimulate the economy. So this is a good way of getting finance. So either you have European grants, you have local grants from local government, you have some NGOs or institutions who are supplying or who are offering some grants. And as the next picture or next slide, or what you see, and you see the piles of money, right? And you see a couple of them. So what this means, the kind of the cheapest way of getting money is the grant. Can anyone tell?
We do not have to pay anything. So we have only to make good reports where we show what we did, how we spent money, each euro or each lei, how we spend it, to report that money went there where it was supposed to go. And that's all. So we don't need to give it back, or we don't need to pay procents for it, or as you said, this the new word for me, shares also today. So we do not need to give it. So this why the grants are cheapest way, I think, to receive money and to have it.
This was an excellent explanation. Thank you for that. Really to the point.
Thank you.
So why does anyone think equity investment is the most expensive?
May I explain?
Sure, please.
I think that equity investment is more expensive because it is the most easier to get it, faster and easier without any reports or something like this. But for grants, you have to show a lot of information, and it's very difficult to get a grant from a government or from something.
Baby wants to say something too.
Yeah.
Maybe he doesn't agree with mommy, who knows? So who else would like to add or share with us why the equity investment is the most expensive way of financing your company? From the point of the founder.
Can I say?
Sure, please, go ahead.
I understood that the equity investment is the most expensive one because all of the money I have to give for the startup. I don't have anyone helping me or lending me money. Okay.
Yes, so thank you for that. And may I just add that the way how a founder looks at it, I have to give up part of my business. It's not going to be me and only me deciding on the course what's going to happen. There's going to be another person, investor, investment manager, who is going to interfere and kind of asking you, okay, these are the milestones. Maybe you think they're different, but the investor may think differently, may want you to grow faster. So I usually say that having an investor in your company is like a marriage. And you know how marriage is. You cannot escape, right? You have to make compromises. You're not alone. And it's kind of the same with the investor. Now, it's not only you. It's not only your opinion. It's also the investors. The more investors you have, the more people you have to kind of manage and wiggle, your room in between them. And then loans are somewhere in the middle because you pay interest. Okay, so it costs you pay interest, but you don't give up your equity. You don't give up your shares. So think about this. If you have the opportunity to go for a grant, go for it, because you get money for your development and you don't have to give them back. A loan, you have to give back with interest, okay? The equity, okay, you don't have to give back, but you have to work your ass off to bring the value, much higher value than the investor gave you. Okay, so this is important to think about before you discuss or think of how to finance your company from external sources. Again, just a quick information for you so you know what the stages are and what the difference is. Has anyone heard what is pre-seed, seed, Series A, Series B financing?
Yes.
Yes.
Yeah.
What is it? Can you share?
I don't know what it is. I've heard about it.
Oh, okay. Okay. All right. All right.
But I imagine, I mean, from your picture, it's quite clear what it is. It's just money to set you up, to start you up, pretty much.
Excellent. Excellent. Thank you for the answer. And it's just the phases in which you receive the investment. So if you have a concept development, which probably most of you are, you're called a pre-seed startup or you receive a pre-seed investment. It's usually up to 100K euros. Here we are in kind of Eastern Europe scale. The Western Europe would be much higher, of course. Seed, when you have the minimum viable product, so you know that product that you have, not with all features, but like the minimum features, is working, and you're developing it and validating. So do I have customers? Do I have market? Can I sell it? Can I commercialize? It's called seed investment or seed phase. Then we have Series A. So it's like first round, that's why A. When the product is ready for market and you need one up to 5 million. Series B, growth and expansion, is more than 5 million. And then it's Series C, Series D, Series E, Series F. So each other round is called with the consecutive letter. So the numbers are not important, but the phase. So that's why the explanation is important. So the development of concept, minimum viable product, validation, ready for market, and then growth and expansion. Okay, and who has heard the term MVP, minimum viable product?
We all have.
Really? So what is it?
First session.
Great. So what is it? Who can tell me?
Minimum viable product.
And what is it? What does it mean? Minimum viable product.
First thing that works that you can put out in the on the market and start actually working, start having revenue from it.
If I didn't know better, I would think that you're reading it from Google, like right now, but I think you're not. It was a to the point answer. Thank you for that. That was great. That really is, and this is something you're, dealing with, I bet, every day to make sure that you will build the product, the one, the final, but the process is like repeating and never ending. So what is important for an investor? Yeah, just very briefly for you to understand, once you start thinking about investment as a form of financing, these are the things you need to think about, and you'll be kind of discussing this with the potential investors. And trust me, it's going to be a long process. It takes months up to a year to close a round, and be prepared to talk to tens or even hundreds of investors before you close. So even if the first investor says no, don't be afraid, don't be sad, don't think it's the end of the world. Just remember what the investor questioned, start working on it. Okay, that's important. Always get feedback from everyone. And that's how you learn, that's how you develop. So you need to talk about sales, of course. How is your market? Because if your market is bigger and bigger, that's what's important, and that's what's in the best of interest for an investor, because he sees bigger revenues. You want to tell him that your team is the best. I said the team is one of the most precious assets of your company. So make sure you have the best, and you have team that you can trust. And trust is more important than the abilities. Think about this. Founder vision. What's your vision? Think about your vision. Okay. Passion for your business. I always say to the entrepreneurs or to the startuppers, when you pitch to the investor, when you pitch to the client, to whoever, be authentic. Okay, make them fall in love with your product, your business. Okay, for me, authenticity is the most important. Okay, so show them how much passion you have. And then diligence and persistence. So you work like 10,000 hours per year on your business, because that's what makes you wake up and then go to sleep. a part of our babies, of course. Now, I would love to recommend a great book for the queens and the kings too. I read this book and it really gave me an insight how you can manage running a business and having a family. So, and how as a woman, you can be emotional and it's okay, and how good it is for the business, and how we kind of complement, you know, with men in business, and how good it is to cooperate. So if you can read this book, I think it's going to be a great inspiration for you. And I will finish my lecture with one last slide. And again, it's for the queens as for the kings, because remember that, you know, when you do what you love, the success will follow. And passion, and I keep saying that, is the fuel behind a successful career. And I see all of you ladies and gentlemen speaking with passion and really being convinced that you can do it. So with all my heart, thank you for listening to me. I hope you have some knowledge and you remember once you start running your business, that financial planning and accounting tools and management accounting and all these terms, and then you remember what to do, how to think. So I hope you enjoyed, and happy to see you or talk to you or stay in touch with you through Daniela and the team. Thank you, ladies and gentlemen.
Eva, I'm still overwhelmed, emotionally overwhelmed by all of this. And well, let me ask you if you have a couple of minutes for questions, because I suppose that ladies here and gentlemen might have some questions. And
yes, I have a couple of minutes. Then I have to run because I am mentoring one Slovak startup that wants to raise money. So they're waiting for me. Those are guys from university. So that's what I need to do, but I definitely have until I think 9 or 10 minutes. So feel free.
So I'll ask you to open the chat because there are a lot of things happening. People are thinking and absolutely enjoyed saying that they absolutely enjoyed the training, best session so far. So basically,
thank you.
You can see I was right from the beginning. So let's see, maybe who has any question? Let's have a couple of minutes with questions. Is there? Okay, Yulia, number 8. Yeah, go on.
Thank you. Quick question. When do you start to pay yourself?
Yeah, that's a good question. You know, I think you need to balance, because you cannot not be paid forever. So you can start with small because you deserve money, right? And then maybe gradually increasing. But always, you know, think you always have to weigh your options. Do I pay for the team, or do I pay the customer or the supplier? It's always very individual, but make sure that the situation is not like you're not paying yourself forever, because you deserve the money. And you know when the time is right, when you feel comfortable. I know that the founders usually get paid a very moderate amount of money, but also they do not overpay the other members of the team, because working for a startup or for early stage company is also kind of a privilege and a passion, because you're in the beginning of something that's going to grow. So people are not working only for money. So I think you can kind of discuss, like, can I give you maybe employment shares, later on, or let's, hit this milestone. And then once we have more revenues, then we can pay more. So I think it's always to be kind of thought through, but do pay yourself when the time is right. I think you'll feel it. It's really a matter of like, you'll feel it, that you feel okay that yes, I'm not stealing money, but I'm paying what I can afford.
Thank you. Let's have another question, Olga.
Yes, I have one little question. Thank you very much. Firstly, thank you very much for such an interesting session. It was very interesting. Yes, I wanted us to ask about grant. I'm planning to ask for a grant, and if exists any model of writing a grant to be like interesting and with important passes. Like I think it is something another than a business plan for an investor, or maybe it is the same. So where can I find this model, or what should I write in a grant?
Well, here, what I usually reply to this question is, if you are not a professional, or you don't have your own experience in writing grants, do hire a consultant. And I'm not saying this because Civita is the best in receiving grants, no, but we have experience, that the founders want to kind of save money, but they don't know how to write the grant of a highest quality. Whereas the consultants, the companies that have experience and look for experienced companies, not just companies who take out your money and then do not provide you with value. The grant, since it's basically money for free, it's a very competitive, I would say, environment. So there is like 1,000 of companies applying for a certain grant, but only 10 get it. So you see what is the percentage, like the success rate. So you have to have the perfect text, like the value of what you're doing, the plan, the finance, the description of the product, of the competition. You have to use the right language. You have to know what the evaluators think, what they want to see, right? And then you have to plan what's feasible doing, because you have to write reports and then report the money in order not to return it. So here I always say, do not think that paying for a good consultant is a waste of money. It's not. That's a path to success in grants.
Yes, thank you very much.
You're welcome. Pleasure.
All right then. Any additional questions? Ladies, this is the last moment that you will get answers from Eva, because after that, it's me and the team,
And it's not worse. That's not worse. That's equally perfect to have the best team.
It's like you are the best person to actually speak about this. Otherwise, I have the experience in giving out grants for like more than 20 years. And in actually getting grants in huge amounts, like starting from very small projects in Moldova, especially, meaning including in Moldova, and to big ones, as well as commercial investments and so on that we are doing. So Civita actually brought together this huge amount of experience throughout the region. And it's not just because Civita is the best, but what we understand and we see, we are working in a day-to-day basis with grants, with the other kind of tenders, with investments. So we have different streams that we work together. So that's why please use this opportunity.
Yeah.
Julia?
Thanks. Yeah, a quick question just to summarize everything. Where can we get more information, accurate information about finances, how to deal with finances and startups? If there's any channels on YouTube that you can recommend, or websites where we can, look for more information. Thank you.
you know, there are thousands and thousands of resources. Like just put what's important in terms of financing of startups in Google. But what I can do, I think that I will send the presentation to Daniela, right?
Yes.
And then she will share it with you. So I will add some resources, okay, for you to use. There are some that I personally use and I can recommend to you so that you don't have to sift through all those hundreds and hundreds of pages.
Amazing. Great. Thank you so much.
Not a problem. Pleasure.
All right, then. Eva, thank you so much. This is the first time that I've seen this group of amazing women and gentlemen that actually have reacted in such a nice and very energetic way. And especially when it's about finances. Are you kidding me? This is like sometimes it's a nightmare, but this time that was fun and interesting and actually clear. So thank you so much for doing that for us. And